from 809, 810, 809, 810, 80, 809, 808 to 810. Let's say 11. Okay. If we move up and above this point, that's good. Wait a minute. This is not a, let me explain it. Price can use this as a staircase. Okay. And from the overall point of view, from 807 to 773, 807, 807 to 770, 773, 773, 773. Okay, let's mark this blue. Remove the middle line, mark it as temporary. Okay, the price is allowed to chop, chop, and chop. Okay, on the 5 minutes time frame, in the 5 minutes, we have an imbalance of a 5 minute here. The 1320 candle is in imbalance. The next imbalance we have is a major imbalance that is on the 15 minutes and on the 5 minutes. The 15 minutes and the 5 minutes, that is 1215 price. 1215. We move back to the 1 minute. Okay. If we move or check the cues, the cues, for reference, if you want to know what we are doing or where the market is headed, right? You have to keep this into perspective. This specific 17th July, 17th July, this gap, you see this gap, there's a gap, okay? This specific gap, the market is using this specific gap as a reference point, okay? If we move up and at least give me a 4 hours closing above this specific price line, above the 50% and the 484.27, if we move up from this point and give a closing above on the 4 hours or a higher time frame close, then the whole trend will shift. Okay, so this is really, I cannot but put more emphasis on this. Okay, this is really important. Okay, so if we move up and above this point, then I'll be looking to target the major highs. Okay, so from for understanding, it may not go in a single day it can take 2 or 3 days. So this is a swing trading narrative. If we move up and give a higher time frame close, I'm repeating this again. Okay, so I've done this multiple times. Okay, so if it doesn't work this time, so not responsible, make your own decisions. But so if we move, I think stream is lagging. Is the stream lagging or is it smooth? Okay. So what I mean by this is on the US100, the major highs would be around, but this only is valid once we give a closing. So I'm giving the narrative with the validation criteria. This may or may not happen, and the price might use that as a ceiling and move back down. But if we move up from that point, so you can use this as a reference point, this specific price, this box as a reference point on the US100, the US100, this specific price. Okay, my God. Okay, okay, okay. So now that you know the criteria I'm looking for, let's move back down to the smaller time frame. My OBS is getting connected and disconnected again for some stupid reason. So text. Okay. The same price is for the reference on the US100 is equivalent to 19,900 to this area, this area, about 50 points range. Okay, so this is what I'm looking for. Okay, so this is what I'm looking for. If we get a closing above, it may take 1 day or 2 day above this point. Okay, once it gets validated, we get a closing above on a higher time frame. That would be the 4 hours or the daily closing, because we have little time left on the day for the close. If okay, it can happen tomorrow. But if we get a closing above, it may take, then it will be validated. Then it can take a day or two, or it can just move back up. Okay, so it can chop in that time. Meanwhile, I can frame a good risk to reward targeting about 500 or 600 points on minimum. So if I'm being conservative, targeting the Mm, okay. If I'm being conservative, the minimum, this is the minimum I can expect with the major highs. So 500 or 400 points on minimum can be expected from that swing trade perspective, right? And use if we stay below this, then I'm not interested in swing longs. Okay, that's a heavy statement. I'm gonna repeat this again. No swing longs. As long as we stay below this box, no swing longs. I can take swing shorts, but it's relatively very close to this point, so I'm not interested. I'll see what happens. Within 1 or 2 days, if we stay below this point, then I can think of shorting it in a swing trade short down, but not right now. So, okay, so let's see what's going on the gold. Who is watching this stream? Is it you, Thales? The gold. Okay, if anyone's interested in gold, you have to keep this plotted on your chart from 2377, 2377.43, 2377 to 2394, 2394. Okay, so now everything I'm going to talk about that will be valid for the next week. Okay, I cannot deny this. You cannot deny this. This is going to be valid for the next week, and I'm talking in terms of swing trades right now, not the short term time frame. So when I am giving some sort of a coordinates, the price coordinates, you can ignore it all you want, but this is how the market is moving, even if you considered this into your analysis or not. Okay, so 239422, 2394 uh, 2394 from this point. Okay, so I do not want, okay, the price will probably use this as support. Okay, if we move below this point and stay below this point, then I'll be in shorting gold, but it will take a lot of time. You have to think of this as, it can use this as support and shoot back up. So as I'm talking in terms of the swing trade narrative, I'm not talking in terms of the day trading narrative. This is a swing trading narrative, the 4 hours, the hourly narrative. So the price can use this as support and move back up. So these are the matlab ke higher targets, taking out the major highs or the major highs or lows. So I'm talking about this term. So you can frame a lot of day trades with respect to this narrative. So on the gold trade, no swing shorts as long as the price is above this point. even if the price move below this point and overshoots, that's not a problem. I want at least 3 4 days below this point. Okay, so these are the coordinates for the gold. I don't usually talk about gold until unless it's something good, right? So you take an account for this and plot this on your chart and let it be there for another at least 2 weeks and watch how the price reacts to this point. Okay, so this one is gold. Who is interested in Bitcoin or Solana? This one is really good. Forex Capital, how are you, my friend? Who is interested in Bitcoin or Solana? I'm putting a lot of cash into Solana myself. Uh, just to be fair, all I'm just telling you, okay, this is what I see. I'm not trading the gold. Okay, I'm just mentioning it. Okay, I trade Nasdaq. I rarely trade gold. I specialize on Nasdaq, BTC, ES, but sometimes whenever the trade is good, I take trades on these charts. So the next one is BTC. Let's analyze BTC first, then we will go to Solana and at least 20% return on Solana. I'm personally expecting being very, very, very conservative on Solana and BTC. So the first one would be the first price I'm interested in. Okay, 63,235 BTCs, BTC. Okay, if you remember, I was talking about BTC when it was moving up, maybe on 15th or some. I said, okay, this prices will be used. Maybe you can go and watch my stream, but I'm gonna show you now. It's an uptrend. Okay, now it's an uptrend. BTC is an uptrend. I'll show you what the price is. 63,208. 63,208. 63, 60, 63,208. 63,208 to 63,700. 63, 63, 63, 681. Yes, basically the same price. 63, 686, 63. Okay, so I'm currently using 15 minutes chart for telling you all this, but this is a higher time frame narrative. As long as BTC is staying above this point. So what I was telling you about the Nasdaq, that it needs to stay above that point, then I'll use that specific point or any of this from this point to that point. Okay, to move up, no swing shorts on BTC, right? No swing shorts on BTC. This is the trend. You can keep this into your consideration. 63 700, 63 200 would be good. So there's a high probability that the price might gravitate towards this point, use this as support and move back up higher. So on Solana, this is good. This is personally interested in. I might get wrecked, but well, USD, Solana. Toll 173, 154 and 160. 154 and 160. I will not remove these boxes. 154, 154 and 160. Okay. 160, 154. The price is up and above this point. For now, the risk is really huge relative to the reward I'm expecting. So I'll be more interested when the price reach to this point. I'll be adding to my position. So the minimum I can expect from this specific is 20 or 18% move. So 1 hour. Okay. Or from this point, I can target major highs, taking out 189 or probably 190. Like I can expect if we move to this point, then I will be expecting it to move back up higher to 190 at least, or 20% move. Get it? Okay. So these are the coordinates 154 and 160. Okay. This is the price range. I'm expecting the price to, as it's an uptrend. First, I have to validate that it's an uptrend. That's I've gotten the validation of the uptrend. Now I'm looking to buy it and timing it right. So just plotting this box specific. I don't know when it's going to reach it. I don't know what's going to happen. But if it reaches to this point, I'm specifically on Solana. I'm not interested in BTC. BTC is just I'm looking at for the correlations. The BTC is in an uptrend. So is Solana. So this is a trade, not an investment on Solana. So you have to keep that narrative into mind because I'll be getting out, probably getting out majority of my position in 18% to 20%. So I'm using a strategy for a specific I've allocated some capital into Solana specifically, and I'm compounding it by taking trades on it. 10% or 20% I'll get out. These trades will usually yield more than that, but I'm to be just more conservative and getting a higher probability and like for the compound interest. 10% per trade is good enough. 20% per trade is good enough with the capital I have. So by the time you get to 20 trades or 10 trades, it becomes a massive thing. So this is really important. I'm showing it again. And the Nasdaq, okay, Nasdaq, 1 minute. I think we have, okay, coming back to our home, the Nasdaq, okay. You see how the price, I draw this box, how the price is reacting to this point, chopping back and forth, chopping back and forth. So the same goes with the Nasdaq. If I don't know if it going to do that, I don't know because it's better not to know. I can assume or presume a lot of things, but that would be wrong. Okay. If we move up and give a closing above this point, specifically this point, I hope you understand my narrative. 19909, 19895. Okay. So that would be equivalent to I've already explained the QQQs at the start of the video. So one thing is one for now, I'm not taking it. I cannot taking basically day trades. I'm looking as how the price will react to these points, giving me a confirmation that either we are going to move back up to this point or not. Okay, so we have an inefficiency on 13/20th candle. This it's also appeared on the 5 minutes time frame. You can see this is imbalanced. Okay, the price may refer back to this at some point. 5 minutes trend is towards the upside. We have gotten the validation that it can be a chop on the 15 minutes. Okay, within the next 5 minutes, within the next 5 minutes, if we give a closing, the 15 minutes would be valid. That would be the first 15 minutes. 15 minutes valid. MV, lock it, move back to the 1 minutes time frame. Okay, if we move up above this price and move towards this point, because we were fighting towards the downside, that could have changed the whole minor trend. Okay, the 5 minutes is aligned, the 1 minute is still intact towards the upside, and that is basically a safe zone for the 1 minute, this specific price. Okay, you have to be very careful with these things. Okay, whenever the price leaves these inefficiencies like it's leaving it now, the price is going to refer back to these points at some point in future. So the higher the time frame, the higher the probability of it turning back towards that point. So the above inefficiency we have is on the 15 minutes. That's really rare. That's a rare occurrence, really rare. So I know, I can assume, or I can think of it, KR at some point it's going to come back to this point. Okay, 19858. But how can I trade it? Right? How can I trade it? As long as we are below this swing trade narrative, right? Because if we move above this point, then I'm le- taking a trade and leaving this regardless of anything, because it has a very high probability of giving me a really good risk to reward ratio. But as long as we are below this, I'm just making these narratives. Okay, the best case would be if it moves up in a perfect ideal world, right? If we clear out these inefficiencies, move up, clear out this inefficiency, give me a closing, 4 hours closing above this point, then I'm regardless if the market closes. This is the point, main point. If the market closes, probably we'll gap up. Probably. Okay. So probably we'll gap up. Maybe tomorrow we get some sort of an overshoot below this point, but not even giving a smaller time frame close, move back up maybe 2 or 3 days, but that's very high probability. This trade is a really high probability if it works out. Get it? Okay. So this yellow box can be used as a floor if the price wants to stay up. We have 2 minutes, 1.5 minutes till the 15 minutes close. Okay. What's minute left till the 15? We are moving back down. The 15 minutes is not giving a good confirmation. Okay. This is the new 15 minutes. We'll see how the 15 minutes closed. We have gotten the validation on the 15 minutes. 15 minutes, the 5 minutes is intact towards the upside. There we go. There we go. Okay. The price can use this as a floor. Can. I don't know if it will or not. Okay, we got in the 15 minutes validation. The 1 minute, this was a fake out, right? We got another close below the previous high. The 1 minute got intact again. And on the cues, on the cues, on the cues from 481, 482, 481.90, 482, 481.90, 481.90 to 482. Okay, this is a temporary price point, same on the Nasdaq or US100. This is the specific price I'm talking about. Okay. As long as it's below this point, I'm not interested in swing longs. If we move and give a closing above, then I'll be interested in swing longs, and that this would be the probable bottom. Okay. 482.00. 482, not 481. 482.00. Just to be clear, I'm not trading this, I'm just reading the tape. Uh, if we move above this point, then I will be interested in longs. But as for now, uh, even though I can read it, but still, okay. Uh, the 1 minute is still intact. We got the 15 minutes closing. We have 2 hours till the market close. Within the 2 hours, if we push back up, or that would be really, really, really nice. Just telling you beforehand, it's not gonna be easy catching this, right? The market will still make you somehow frustrated, but if we move up and above this point, then the job left to do is to frame a good risk to reward. Frame a good risk to reward means if I'll get knocked out because I'll be taking trades again and again and again. If I get knocked out, I'll take another trade. Take another trade, but I'll leave it open. That's the whole point of a swing trade, right? For 3 days or 4 days at least. On a 1 minute, this is an invalidation criteria on a 1 minute, plus we have an inefficiency. The minor trend probably might some mess around a little bit. Okay, nice. Hello, Matthew. Brother, how are you? Discord boys. Okay. So the price, as I stated, the price probably will use this as support, 12 points. The 1 minute is still intact. Okay. On the 5 minutes, 5 minutes is still intact. Even the 15 minutes. So the first probable stop would be about 35 more points probable. If the 1 minutes remains intact, then it's leaving an inefficiency toward the upside. Cleared out. जी, मैं ऊपर। ठीक है, ठीक हो गया। ठीक। One minute is still valid. If you have joined the stream now, you can watch the start part of the stream. I've explained a lot of things. So I've explained this whole swing trade narrative on the Nasdaq and what specifically I'm looking for. So that would be really, really, really helpful. It can chop all around it want. I'm not interested in all of this price action as for now. And I already explained what I'm looking for specifically. I'm just reading it now. I'm not trading like specifically right now. So let's see. Okay. Matt, have you learned about the basics? Have you downloaded TradingView? Have you set your watch list? Back at the base. See how the price is reacting to the base. 1411 inefficiency. Luis Silva, brother, how are you? How are you? New 15 minutes candle. Okay. Mm. Doing great, brother. Still killing it. Nice. That's really nice. Okay. So this 1411 is inefficient. Okay. See how the price is reacting to the base. The 1 minute got intact again. The next would be if the next inefficiency on the higher time frame basically would be on the 15 minutes, and that's equivalent to 1859. 1859. Luis Silva, do you trade the DOM? Uh, Maybe. I'm just assuming that you do. Depth of market. Okay. Okay. So footprint and book map. Footprint and book map. Uh, Okay. Isn't Bookmap still a DOM? Mm, So I use Bookmap as my DOM, but I don't trade off of it. I just use the levels. Yeah, yeah, that's nice. Okay, I understand. And be footprint aggressive orders and be passive orders. Bookmap passive orders. Hmm, interesting. That's nice. Okay, so this usually is an early indication of a range. Whenever the price closes above, closes below on a smaller time frame. So I specifically use this as an indication of an early range. It may expand itself to the higher time frames. That's all you need to know with the market. Interesting. That's really interesting. So, what is your criteria for you to determine that if the price will range or not? Ranging conditions. Last week, my team was averaging about 20 to 40 hours per day. 20 to 40 hours. Nice. 20 to 40 hours. No way, man. Like, okay. 20 to 40 hours, right? So, the guy who won basically the Robbins Cup, right? He won it with about 300, like basically 3 hour return. So 6 point stop. Yeah, okay. Okay. I get it. It is possible. I'm not saying it's not possible, but it's really rare, right? All of my trades are 6 point stops. Nice. Okay. But I personally lean more towards like if I catch a trade on the swing, yeah, I'll just leave it open for about 500, 400 points with about like 20 points risk on average. It may take me around 2 or 3 tries to get in along with the trend, but whenever I catch the trade, that's really good. So sniper entries, it can get really frustrating sometimes, like 6 or 5 point stops. So you're trading Nasdaq or ES because I don't think you're trading the Dow. Dow does not respect anybody. That level, I'm not. Dow, you see how I understand, right? Is if I were to trade the way you like talking about on the 5 or 6 points. So at the start of the stream, I draw this, so I could have taken 1, 2, 3, 4, 5, 6, 7. So these are the levels I trade or I have like on my chart. I see them working out, but I don't like taking bits and pieces. You see how it's reacting to this point again and again. So Dow Jones is really, really, really fucked up. It will not respect anything. It will overshoot everything. If, like, for example, I know this is supposed to work this way, right? Through my own back testing, that it's going to support price at somehow. Okay. But even the Dow has to respect it. It will overshoot it for about 30 points. 30, 20 points is nothing on the Dow. So, so Luis, if you are watching this, okay, never traded the Dow. Yeah, that's really good. If you trade I started with the Dow, na, uh, but it made me respect ES and NQ more because it's total madness. It's complete madness. Okay. So if you watch from the start of the stream, I've presented a narrative. So that would play out. If it plays out, so it's going to yield about 300 or 400 or 500 points at minimum. So basically, Lewis, what I was saying on the cues, I'll show you what I'm talking about on the cues, right? So according to my personal strategy, right? If we get a closing above this 484.26 on a higher time frame, okay, the daily close, the 4 hour close, okay, then I can use this specific, okay, I'll be using this specific price as a floor. So my risk would be if we get a closing, an hourly closing below, I'll get out. I'll not be interested. Okay. If the price moves above this point, I'm in. First it needs to close, then I will be in. Okay, so my risk would be really, really small. A single point on the, as you already know, probably a single point on the Qs is 40 points on the US100, right? So it would not be like 20, 30 points. So 20, 30 points with then I'll be targeting the major highs, major swing highs, like these highs, these highs, these highs. But the first criteria for me is to, you can think of this criteria as this box also. Okay, this opening range gap on the 18th July. 18th July, if you plot this on the year chart, if we get a closing above, you can use this as a whole or this price specifically, 484.27. Okay, if we get a closing, then this specific 14 or 14 or 12 or this whole will be relevant at that point. And take a swing, let it run for about 2 or 3 or 5 days, but it needs to give me a validation first. So as long as we are below that specific level, I'm not interested in swing short. So I'll how I trade is basically I'll first make a general map mental map of where the market is moving. Then if I'm interested, I can take day trades or uh, basically short term trades along with that narrative. Okay, so 11:25 and we are moving back down. This is inefficient, this is inefficient, so I'm not interested, as I was stating, I'm not interested in whatever this is. As long as we are staying below this, I'm not interested in swing longs. If we move above this, then I'll be taking swing longs, right? So it can chop around, chop around, chop around. But if we stay here for long enough, basically 2 or 3 days, then I'll take a swing short. No, I have studied ICT for like a year or two, but not trading any of it. ICT basically is a fair value gap. Majority of it's a fair value gap, right? Or the N dog or the N vog. These are the things I might consider them, but I do not prioritize them. Okay. So I have traded a lot of different strategies. I do know about those strategies, but I do not prefer them because it's not fixed, right? ICT guys want some because they get attracted to those things because they want certainty. That's the primary factor of our brain. We want sense of security, right? So ICT talks with such confidence, right? FGV, yes, exactly, exactly. So what I am referring to as an imbalance, Lewis, would be a wickless candle. So, okay, this is, you can just eyeball it. Okay, 90 to 95% of these candles have wicks, right? So whenever on even on a 1 minute, if price leaves a candle which is wickless, right, it will refer back to that point at some point in future. I'm not using that as a target. I'm not using that as anything else. I'll just mark it as a, okay, if you're using a fair value gap, that would be the body of that candle. I'm using the extreme. So you see this point, how the price referred back to. So whenever use these things, I'll have a statement. The statement will determine my behavior. So I can also say if I somehow find out about this scare, if the price referred, so I can say I can use it as a target, but that would become invalid. That would force me to take illogical trades, right? Targeting this point again, like if the price leave this and I'll be looking at this point, my whole focus would be at this point. Okay, so I'll be targeting this again and again, like getting stop out. So I'll use this with the statement that the price will refer back to this at some point in future. I don't know when. Okay. So whenever it starts to move in my direction, I can use this as a confidence, nothing else. So I have a lot of systems, but I've set it according to the priorities. Look inside the candles with prints. That's really nice. That's really nice. Now, okay, this is generally imbalanced, right? This is imbalanced and that is imbalanced. So how can I comprehend this? Okay, the price is going to refer back to this point at some point in future as and that point. So if I'm interested in longs, I cannot take a swing long from this point. Or even if the price starts to move back up, I have to cut my trade short because it's leaving something behind. So if I leave my trade open, if I have taken my position from this point, right? Strategizing in my mind, right? So if I leave my position, either I have to place my stop loss at break even or I have to cut my trade short at some point because it's going to refer back to this point at some point in future. You can also see this, the higher the time frame, the higher the probability, because the higher you go the up the time frames, the less wickless candles you see. Okay, see this point, how many candles are wickless? Majority have wick, even if it's a small dot, it is like wick. So this is do not think that this is the priority strategy. This comes at like 2% weight after everything is done, after I have my areas of interest. Like this is my general area of interest, how the price is reacting to this point. So this was my minor area of interest, how the price reacted to this point. Plus I have my own swing trading narrative. So it's ICT just makes it simple. So people wanna believe him. So so Lewis, if you just plot that on your chart, do not act on it, it's not necessary. Just if we get a closing above, regardless of the time, even if the market is closed, doesn't really matter. The whole market is connected. You'll see what I'm talking about. This may not happen, but if it happens, that would be a really, really, really good trade. Even if you don't participate, just keep in mind that that's what I said. Because in this channel, I've done this thing like about 20, 30 times. So on a 15 minutes, and this specifically is my personal indication of a higher time frame chop. Okay, when what I refer to here when I was started talking that this, whenever we got a closing above, a direct closing below, this is an early indication of a range. it might expand itself into the higher time frame. So a range, whenever it starts from a lower time frame acting like that. And a trending market would act in a close above the wick, close above the wick, close above the wick, close above the wick. So now we have reached the 15 minutes time frame. We can expect a choppy price action. So I think we have a lot of time till the close, and I'm not gonna sit here till the chop. If anyone's interested, you can watch the stream from the start. I've explained Solana, I've explained BTC with the with a high probability, Solana, BTC, gold, and the Nasdaq narrative. Guys, thank you so much.